All right, let's just dive right in. Today, we are tackling a pretty controversial idea, one that really goes against the grain of what we're all taught about investing. We're going to pull back the curtain and ask the question, is hiring a financial advisor actually the smartest or even the safest thing to do with your money? Let's get into it. So let me start by asking you a question, and I want you to be really honest with yourself. That portfolio you have, the one your advisor calls safe because it's spread out across a bunch of mutual funds, is it really safe, or could it be a huge gamble that's just disguised as a sure thing? I know. That sounds totally backwards, right? From day one, we're told diversify, diversify, diversify. But here's the twist. The danger isn't in the diversification itself. The real danger is in the false sense of security it gives you. It makes you feel so safe that you stop paying attention, and that right there is when you're most at risk. Okay, so let's get to the root of the problem with this whole system. It all starts with something called boilerplate investing, and it forces us to ask a really uncomfortable question. Are you paying a premium for results you could get for free or worse? So what is boilerplate investing? Well, think of it like this. It's the fast food value meal of the financial world. You walk in, they ask you a couple of simple questions. How old are you? What's your income? And boom, they hand you a prepackaged, one-size-fits-all portfolio. It's quick, it's easy, but it totally ignores the things that actually matter. Your unique goals, your personal knowledge, what you're actually trying to build. So when you hand over your hard-earned money to these boilerplate strategies, you're paying some pretty hefty fees for that professional management. We're talking billions of dollars as an industry. But what exactly are those fees buying you? What's the actual result? Okay, don't let your eyes glaze over because this chart tells a shocking story. Look at that top line for actively managed funds. Study after study, like this SPIVA scorecard from S&P, shows the same thing year after year. The vast majority of professionals fail to beat a simple market index like the S&P 500. We're talking over 92% of large cap funds over the last 15 years. And look at a famous example, the Fidelity Magellan Fund. Investors paid them somewhere between $4 and $5 billion in fees over 15 years for performance that was worse than the market. You're literally paying billions for underperformance. It's wild. And you know what the real cost of this system is? It's not just the fees. It's the total, complete lack of control. You've essentially become a passenger in your own financial life. See, when you invest in things you don't really understand, you can't ask tough questions. You can't challenge the plan. You're just sitting in the back seat, just hoping the driver knows where they're going. So if the conventional method is broken, maybe we're all chasing the wrong goal too. Let's talk about what financial independence really means. Because this shift in thinking, well, it changes everything. See, society tells us the goal is to get rich, to build a giant net worth. It's like spending your entire life filling a treasure chest that you're not allowed to open until you're 65. But what if the goal was to be wealthy instead? That's all about cash flow. It's not about some giant locked-up number in the future. It's about building assets that put spendable money in your pocket month after month, right now. And that brings us to the real finish line. This is the definition you need to burn into your brain. Financial independence isn't a number, it's a state of being. It's the moment your passive income, the money your assets make for you, is more than your monthly bills. That's it. The second that happens, you are free. You don't have to work for money ever again. That is true freedom. Okay, so how in the world do you actually get there? How do you build this cash flow and take back the steering wheel? The answer isn't a secret stock tip. It's education, a real financial education built on 4 essential pillars. This is your roadmap. Think of this as your new school curriculum. First up, fundamental analysis. This is just about knowing if a company is actually healthy. Can you read a financial statement and see if it's a strong business or a weak one? Second, technical analysis. This is about reading the market's mood. It's looking at charts to understand supply and demand so you can make smarter decisions about when to buy and sell. Third, cash flow strategies. This is the fun part. This is where you learn the actual techniques to get your assets to pay you, whether the market's soaring, crashing, or just going nowhere. And finally, and this one is absolutely crucial, risk management. This is your defense. This is knowing how to protect your money so that one bad bet doesn't take you out of the game. You master these 4 and you're in control. Now, this is a super important point. The goal of learning all this isn't necessarily to just go and fire your advisor. The goal is to completely change the relationship. And education turns you from a passive client into an active, informed partner. You can have a real conversation, understand what they're suggesting, and actually hold them accountable for their advice. When you strip everything else away, it all comes down to this one simple, powerful truth. A financial advisor, even a great one, has 100 other clients. To them, it's a job. But to you, this is your life. It's your family's security. It's your future, your freedom. Nobody on this planet will ever care about your money as much as you do, period. So ultimately, making this change is about a deep, fundamental shift in your mindset. It's about moving away from being a passive spectator and becoming an active creator of your own wealth. Look at the difference here. The passive approach is just hoping. You put your money in a 401k, close your eyes, and hope that in 30 or 40 years, the market has gone up enough for you to retire. It's a strategy based on luck. But the active approach? That's about building. It's about showing up every day and deliberately laying another brick in the wall of your financial freedom. It's a craft, not a gamble. So I'm going to leave you with this one question to think about. When it comes to your money, your future, your life, have you been sitting in the passenger seat, just hoping for a good outcome? Or are you ready to learn, to take the controls, and to become the pilot of your own financial destiny? The choice, as always, is yours.